What's going on, YouTube? So I'm looking at another dividend stock today, and before I get into all this, I'm trying to purchase dividend stocks because they pay me a passive income, and two, I'm trying to build a bridge
account designed to carry you from whenever you retire, say your early 50s, until you do reach age 59 and a half and can begin to make penalty free withdrawals from those retirement accounts. So, what is a bridge account? Well, most often, a bridge account is a savings or taxable investment account that's funded with after tax dollars.
and the best one I could think of is with dividend paying stocks. Now, comment down below if you think these videos are useful, and like to subscribe to my videos. Now let's get into this video about what is my requirements for my stocks that I'm purchasing for my portfolio. Number one, it has to be a dividend paying stock. Number two, it has to have good growth for the future because I'm looking for a long-term stock. I'm looking to lean on the growth side. And number three, financial stability for the future. So let's get into this stock. The stock I'm going to look at today is going to be United Health Group. They're an insurance company, and they're supposed to help with finding doctors, give you drug costs, and it's one of these type of things that in the United States you have to have a insurance if you want to be able to be secure and have good health coverage. Now, we can get in a debate if health insurance is a scam in America or not, but at the end of the day, right now we need it, so I'm looking into it, and I don't think they'll be getting rid of health insurance and doing anything else like giving free healthcare for everyone in the United States. So I'm going to look into this one because I think it has future growth with the potential of it future because of as many baby boomers and silent generation is needing health insurance, and Medicare and Medicaid sometimes doesn't cover it all. So let's look at the dividend growth of this first. So United Healthcare had a dividend summary of 1.63 a year with the annual dividend of $8.04 or 40 cents. Now, they have a dividend increase tracker of 15 years and an annual dividend growth of 13.46. So it's a really good dividend growing stock. So the growth of this dividend is pretty good. And they have a pretty strong history of paying for the last 15 years. So it does meet the criteria of paying dividend and has a really good dividend growth history. Now let's look at the growth of the company based off the stock. And right now, let's look at the 1 month. Now, 1 month it looks like it's been growing by 8.65%. Now that's pretty good. The year to date it grew 2.01 plus that 1.63, so 1 year growth looks like it's about 3.64%. Now if I take that was year to date, if I take the actual 1 year 4.31 plus 1.63, it gives me a 5.94 growth that year, which is not bad. And for 3 year it grew 0.67, which due to events it did drop and has 112%. And let's look at the overall, it looks like it grew pretty well. Now let's look at the finance because the growth of the company is looks like it is growing and looks like it's getting out of the rut. And based off that information, it might be good for me to buy this company. So let's look financially. Financially, it's growing 200 billion, 226, 242. COVID year 257, 287, 320. So it looks like it has pretty good growth. Now, the operation expense is 5 and the net profit is 3.81. So the profit isn't really that great, but the operation income is 5.99%. So financially, it's stable. Is it the best finance? No. Now, the analysts do say it's a strong buy right now. Let's see what investors are in this company. Vanguard, BlackRock, and State Street. They're very big. Let's see who's the top seller. BlackRock sold 2.17%. That's interesting. Maybe they're day trading or swing trading. But let's see what AI says about this stock. Valuation 3 out of 6. Earning 3 out of 6. Future growth 5 out of 6. Historical performance 4 out of 6. And financial health is 1 out of 6. So this company looks like it has great growth opportunity. It looks like it's weaker on the financial side. So I will tell you right now that based off this information that I see, I don't think I can buy this stock. Just because it says a strong buy and has a good history, it doesn't look like it's going to grow as much as I want it to grow. Now, it doesn't mean it's a bad stock. I believe this is a good blue chip company. Now, the reason why I'm not going to buy this stock, and it's a very good reason why I won't buy this stock, is because I'm looking for a growth rate year over year, at least of 10% and above. Now, the dividend growth of this is phenomenal, and the finances are just stable. So for me, this is not going to meet my portfolio because I'm looking for the outstanding stocks to add to my portfolio, not the meet the S&P guideline. Now, I will tell you, you should add this stock if you're looking for a long-term investment, and this is a good long-term investment, and it looks like it is starting to turn around. Now, maybe in the future I'll change my mind and I'll sleep on it tonight, but at the end of the day, right now, the year growth isn't good enough for me with the 4% and the dividend yield. I am still looking for those combined to be at least a 10. Now, should you invest in this company at the end of the day? That is up to you. But personally, for me, I think I'm going to add this to my portfolio for my retirement account, but not my dividend growth one. Now, I'm taking a riskier route for my dividend growth one because I have a long way to go, and I'm not looking at the dividend growth. I'm looking at the growth of the company. So the growth of the company isn't that well. The growth of the company is great, but the financial health isn't that good. And I'm worried about the financial health more than anything because they go bankrupt. What is the stock going to be left to? And who's going to buy it? It might not give me the same valuation. So like and subscribe to my video. That's all I got. I won't be investing in United Health Group Incorporated, UNH, just because the financial health isn't that great. The growth looks good, but the financial health doesn't look that good, on my opinion. That's all I got for you.